Hey guys, welcome to the pod team. My name is AJ.
Hello guys, this is Lex. Again, welcome back to another video.
Hey guys, so let's follow up on the video we did on Thursday about Silicon Valley Bank. I'm sure you guys have heard a lot of terrible news going into that bank. So let's actually see the facts that were going in. So Silicon Valley Bank basically is losing money more than it's making money. So, Silicon Valley Bank is a bank in California where companies like venture capitalists or new startup companies in the tech sector would start their business in. So, it is a very important bank for those companies out there. But now that a lot of customers are withdrawing their money, it's hard for that bank to stay afloat, and that can cause a lot of problems in the tech sector, especially the S&P 500 and Nasdaq if you're in stocks. So look for that real closely. And basically, if you have anything to say, Lex, then after that we can continue.
Well, I was gonna actually, I was just while you were talking, I was thinking about how many people in small companies they're gonna be in trouble because of this too. If these companies had money in this bank and they're new companies, these guys probably don't have money to pay their payroll taxes, rent for their buildings, offices, bills. I mean, this is just the beginning of what's to come because of this bank going out of business.
So a lot of people say that this is going to be like the tip of the iceberg, that there's also multiple banks that are in the similar position now. Uh the start of it all happened last week with Silvergate Capital. That was a crypto bank that had managed a lot of crypto assets for a lot of other companies that also went out of business, and now it's Silicon Valley Bank. So the reason why Silicon Valley Bank is going through this is because of a silly mistake that they did. And I don't think any bank should have the power to do that without letting, their clients know. Now, if let's say, for example, if I was to deposit $10,000 or $100,000, then according to the rules of like FDIC and the banking system, the bank has the right to have at least 10% of whatever amount you have in the bank ready for withdrawal at all times. I mean, they could give you the full amount too as well, but at least 10% is like standard for, like, all
Every bank.
accounts at the bank, correct? So, and FDIC insures $250,000 in any given account, whether it be personal, business, commercial, savings, unless if you have, like, if you're in private banking, then you have another set of insurance rules that you can apply as well to your accounts if you have more than $250,000. Now, this is very important because if you do have more than $250,000 in your bank account, then it's not good to keep all your eggs in one basket. You'd want to, like, put in money markets, stocks and other places where these kind of things don't happen. And a lot of people, that's why they invest in real estate, where they can have their money, even if it grows slowly, it's somewhere and not in the bank where these kind of things happen. So what mistake the Silicon Valley Bank did was that it, in 2020, during the COVID issues, the Fed lowered the rates to absolutely zero, or 0.25, 0 to 0, 0.25 percentage basis point, right? So when they did that, a lot of banks wanted to look for investment opportunities and stuff. because banks, what do they do with our money? They invest it. So, that's how banks make most of their money. So they took $100 billion and put it in a treasury bond with a yield of 1.8%, 1.79%. And it literally made like a bet that, the Fed rates are going to be down for a while. Well, in 2022, you can obviously see that that wasn't the case. The Fed moved rates rapidly. They moved it the fastest that they have ever done it. Right now, I think it's sitting at 4.75, 4.5. And they're about to supposedly make an announcement on another rate hike, which is even higher than the 0.25% that happened last time. They might even raise it to 0.5 basis point. Now, I want to share the screen and show you some of the uh
So, but AJ,
yeah.
to the bank's defense, uh, back then when they did it, at that moment, at that time, it looks like it was a good idea.
Correct. At
It
that
was a decent decision back then. The problem was when the government started going up and the interest rate.
Correct. So if I was a bank and the interest rates were all low and the treasury bonds are when the rates are low, the bonds are yields are usually higher. So when basically if the stock market is high, the bonds are low. And if the
Right,
stock market's low, then the bonds are higher, right? So it looked very interesting at that point when rates are low, banks are trying to make money. So the only way they do make money is when rates are high. People are, or in at least an average amount. So they make something. Now, if you're a bank and you have the responsibility of all these accounts, which let me include 91% of their clients had more than $250,000 in their bank account. So that tells you a lot that people have lost, or these companies that are going to lose a lot of money if
right.
nothing's done real quick. But getting back to the point, I don't think it was a smart decision even at that time, because I think maybe you should use a little bit of your investment to get to that bond, so if anything happens, then you're prepared for it. Now they kept it for 3 to 4 years. Now the thing is, when the rates go high, money and inflation is going high, so whatever you invested like prior to that loses value.
Yeah,
So whenever, like, if you're trying to even sell it, like let's say you need the liquid, you need the cash, you need to be liquid. If you sell it, you're selling it for a lower amount. So right now, I heard that even if SVB is trying to sell whatever their assets are, they're getting 60 cents on it for every dollar. So that's even a
that's a big
bigger
loss.
loss. Yeah.
That's a
So
big loss.
when they sold at least 21 billion of it, all right, let me share the screen and show you exactly their financials of what they have shared. So if you look at this, they have $212 billion worth of assets and $342 billion of total client funds in their account. Now, this is before they've lost a lot of assets. Like, even just yesterday, more than $42 billion was just withdrawn that could go through. After that, a lot of people's money wasn't even going through. You see what I'm saying?
Right.
So, I mean, it had a lot of opportunities. And uh if you go to their quarterly update, the first quarter, you will see on, like, literally the first page they'll talk about it. So right here, they took strategic actions to straighten their financial position, which means we need to sell right now. We had to sell a lot of assets to keep afloat. That's what it literally means. We have sold substantially all of our available for sale securities portfolio with the intention to reinvesting the proceeds, if there is any proceeds available. And they were seeking to raise $2.25 billion. So that's why they made a common offering, which sank the stock. Like the stock went down 69%, which we talked about that on the previous video. Now, real quick. So the actual right here, what was for sale is 21 billion. And it came out from their, this yield of securities that we were talking about, which was at 1.79% for a 3.6-year duration. And their loss was $1.8 billion. And when people saw that, a lot of venture capitalists started emailing, hey, you know what? They don't have the money, they're losing money. They invested $100 billion into yield security. So what happened is, word got out, people started taking their money out, and it's called like a bank run. So they're trying to get their money in this frenzy, in this fear. So the last person standing is actually would get screwed, right? All their
Right,
money would be
right.
like literally gone. So people started trying to move their money out of there, put it in different accounts, and uh it is very scary, especially if you have more than $250,000, because you're not FDIC insured. So this is the offering they made, which is 1.25 billion. And then they also got a commitment of 500 billion from their partner, General Atlantic. And like anything, right now they got kicked out of Nasdaq, so they're not even on the Nasdaq market. You're not going to be able to short them. You're not going to be able to if you want to invest in them. I don't even think it's wise to invest in them. So what
Well,
so what happens after, right? So we got Mr. Bill Ackman, the famous guy that said sell everything at when the COVID pandemic happened. And he was the one actually buying puts when everything did sell off. So now he's calling it and he's saying the government has 48 hours to fix a soon to be irreversible mistake. Basically, in this tweet, he's saying that, if you don't basically give them a bailout, then it's gonna be like a domino effect, and other banks will be uh basically infected, because this is just like the tip of the iceberg, and it'll go out, and soon it might even hit bigger banks if you're not careful with this, if the Federal Reserve doesn't act upon it, because
well,
basically
what can they do? I mean, if they help this bank, they're gonna help the next bank and the next bank and the next bank.
correct,
And
because these kind of actions are basically telling you that uh like it just like what happened in the 2008 financial crisis. These kind of things are telling you that the government doesn't really care, and your money doesn't matter.
yeah,
uh all that hard work and everything doesn't really affect the bigger companies, because if they get a bailout, you're still screwed. But the reason why he's saying to give them a bailout is so that all the depositors do get their money, so they can go back to work and do a everyday whatever they expenditures they need to keep their business running.
well, it is what it is right now, man. We just hope that whoever has money in the bank is gonna be able to get it eventually, because it's looking like it's too late to get it out now. And like always, AJ, thank you for the information, man. That was good info. Great video. Hopefully, we're gonna on the next video we're gonna try to keep you guys updated of what's happening. And just come back and see us again.
Well, I was gonna add, what is your take on all this? Do you think we're gonna go into another crisis?
I
And
think we
do
are.
you think we should be prepared and try to get some cash liquid or something?
I think that's gonna be a smart thing to do. I think we need to have some cash at home. Not a lot, maybe. Uh, this I think this is the second bank, including Silvergate, and this bank is the second one. I think there's more to come. There's gonna be the housing market is also gonna be a problem, so it's gonna be a combination of things. But yeah, let's be ready and prepare.
I think if anything, I don't think people should put their cash in the house because it's I'm a big I'm not a big cash guy. I like to have like credit cards or the phone now. I
Yeah.
think if anything, people should invest in a safe box, and put some money in the safe box and put it in the bank. That's still secured and stuff. You know what I'm saying?
However, is whoever is the favorite thing to do. I mean, you know,
I mean,
having
yeah,
your
some people.
money
I just don't want
under
to like tell people like hey, keep your money in the house, and then if something happens to them, and then they get robbed and stuff, and then we're like, oh well,
right.
the Potsy told us. So
Well, it just whatever is suit you in your life. If you
yeah,
wanna have it at the bank, great. If you wanna use credit cards, great. And if you wanna buy gold, go for it. Because
we
gold is
should we
safe.
should do a video on
Yes.
gold. I think we should do another video on gold and see where to invest. And I think that
No,
would be a very
no matter what happens in the world, gold is always a solid investment. So again, if whatever people like to do, go buy silver coins, gold coins, invest your money in gold, whatever you want to do, just make sure you're ready for whatever is coming.
Do you well, and if it does, like the market did go down a lot. So if it does happen, or if another crash happens, have like some liquid cash in like your stock portfolio. Like we talked about in another link. Have some money in your stock portfolio so you could get on these investments and make some money. If there is a crisis, just know that the next earning sessions are not going to be good because a lot of tech sectors, if they had their money in the Silicon Valley Bank, will get affected. So we'll see if we don't see it in the week or so, but we'll see a lot of things play out. And I think it's going to like really be a dent in the economy. And you know, just be prepared for something like a black swan event.
We probably gonna get to where we're going like in the next, I think in the next 90 days or less. The
Chat
worst,
GPT, March
the worst is
15th.
to me the worst is between now and 90 days.
Yeah.
Is
Chat GPT, March 15th says the
we
stock
see
market will crash. And we have CPI data on March 14th. So we will be talking about CPI on Monday and on Tuesday. Pre CPI data we'll talk about on Monday, and then what CPI data happened on Tuesday, and let's see what happens Wednesday. Let's see if the stock market crashes, and if Chat GPT is right. Oh my goodness gracious, AI would be a killer. It will
it
be a
will be
killer
it will be something
going
that is
into other things. So just
it's
it
gonna be
might be a life changing scenario. Like these next 3 days that are coming next week are going to be very, very important. And I think a lot of investors should make smart decisions going into these next 3 days, whether you're a bear or a bull.
right. I mean the best thing to do at these kind of moments is just make sure you do your research. Make sure you're comfortable doing what you're doing because it's at the end of the day, it's your money.
Correct.
If you lose it, it's your money. Whatever choices you make is on you, and it is your
And we
money.
all
So
hope
just be
no one
careful.
loses their money. We all hope no one loses their money because we all know that we work very, very hard for that
Yes,
money. Even if you're shaking that booty or shaking some burgers or something, so or
Oh
shaking
man,
the
I don't know about
booty.
shaking burgers, man. I think you mean flipping burgers.
Hey, you're
But
working hard. That money is it doesn't come easy. So,
how can
uh,
how can you how can you make a burger? How can you shake a burger and make it?
the fry pan, shaking the
Oh,
burger fry pan.
so that's how you do it? Because
That's why I'm
usually
not the
just a
cook,
flip it.
man. That's why I'm not the cook.
Usually you flip it.
I'm the
But
ass shaker.
whatever you
But
do, man, be proud.
yeah. All right, guys. Thank you for watching this video. Share, subscribe, like, and we'll see you in the next one.
Oh, so this is it, huh? So this we're done with this video. All right, guys. Thank you. See you in the next one.